First take on the index, well in the green, Nifty at 19,512, so conquering that milestone.
And it's the mid-caps which are going very strong.
It's like a different market, right? The
mid-cap
market, they're
right?
two different markets. We're back to saying that mid-caps have a complete mind of their own.
The markets, Nifty at the day's high, 81 points higher there, 0.4% of a gain is what we are seeing.
Big swing day, right? And the opening happened, and then there was a big sell-off which happened, and then there was, a second coming of sorts, and the market's stable after that. We're up about 1/3%.
It's a 100-point gain on the Nifty. It's picked up a bit, 19,535, a 0.5% rally.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Sensex and Nifty hit the highest level in a month as stock markets extend Friday's gains. Mid-caps outperform the blue chips. The institution you create must outlive you, says Uday Kotak in an exclusive interview after stepping down as the MD and CEO of Kotak Mahindra Bank. Kotak adds it is very important to preserve the essence of entrepreneurship even in one of the most regulated sectors. Kotak Mahindra Bank ends 0.5% lower. CNBC-TV18 News Break is confirmed. Zerodha co-founder Nikhil Kamath increases his stake in gaming company Nazara Tech by investing 100 crore rupees. Kamath says he's looking to increase his stake even further and expects the gaming industry to grow multi-fold in 10 years. Nazara Tech surges nearly 10%. Brokerages take note of an increase in cement prices in the eastern region, fueling a rally in stocks of cement majors. A weak monsoon has also led to an early resumption of construction activities, say experts. Rail Vikas Nigam and GMR Power hit 52-week high post big order wins. Subro soars 8% after it develops thermal EV solution for hydrogen cell bus. IDFC First Bank rallies post a big block deal. Okay, those are the top headlines that we'll track, but straight to the day's trading action now. Market extended Friday's gains. Nifty and Sensex gained close to 0.5% to end at 1-month highs. There's no stopping the mid-cap outperformance. That index hit new highs to end 1% in the green. Nifty Bank rose in line with the benchmarks. Prashant Nair joins in with a wrap of all the action on the Lal Street. Prashant.
Well, a flying start to the week once again. The Nifty doing well, 3-digit gains, Bank Nifty doing okay. And broader markets, the small cap index was up 4.5% last week. It had a great start once again this Monday with another 1.4% kind of gains. Mid cap index was not far behind, as you can see, 1% there as well. Large caps I'll tackle first. So you had gains in the sort of old economy, steel and metals, Coal India, Tata Steel, Hindalco, top of the list. Ultratech did well from the cement space, and then you had some of these technology names, things like Wipro, HCL Tech, which participated on the upside. The party in the broader market is on, and I'll get to stocks straight away there. So the rail infra stocks, names like RVNL, IRFC, IRCON, financials like Yes Bank, IDBI, metal names here as well, SAIL, NALCO, MMTC, cement names, the large cap Ultratech, but mid caps as well, Dalmia Bharat, Shree Cement's participating. And then you had an assortment of individual names, Nazara Tech, there was that sort of stake buy, which we had broken, Nikhil Kamath buying more into Nazara Tech, stock ending about 10% higher. D-Link, Jayaprakash Associates, right? I mean, back from the dead in more ways than one, 20% higher. Limit Up, Shipping Corporation of India, there was Bajaj Hindustan, Triveni, actually a lot of the sugar names participated on the upside. PTC, Atul Auto doing another 7%, Sola Wilson, and many others. So it's a long list of volume-led gainers in the broader markets, and smaller the better. Small caps outperforming even mid caps, and you go down the curve, mini caps, micro caps outperforming small caps. So that's the kind of market we are in. Some pullbacks as well. So Railtel saw some pullback. GMDC, EIH Hotels, which did very well last Friday, pullback. Action Construction Equipment, PG Electroplast, and Prestige were some of the names which saw marginal cuts after the run-ups that they've seen. Two things to watch out for. One is oil prices, important, the most important import for India. It's nearing $90. So far, the market's ignoring it, but we need to kind of hope it doesn't go sharply higher from where it is and cools off, actually. And the second, of course, is the U.S. market itself. The jobs data last Friday was softish, but the market did not respond in the U.S., maybe because it already had done quite a bit. But I think those two things will be important to track as we come back tomorrow.
Okay, all right, Prashant, thank you so much for joining us with that take. Let's go to the market opinion now. Rahul Arora, CEO of Nirmal Bang Equity, says that there is interest seen in lower end in mid and small caps. He also added that for a long-term investor, it is not a bad time to start investing in some large cap stocks.
At some level, the market is for lack of a better term, bereft of ideas. So I think that's why you're finding a lot of the interest that's coming in at the lower end of the mid cap and small cap. There are so many of these, right? Another one that comes to mind is PowerMech, APA. There's so many of these that would probably have EPSs doubling between 23 and 25, and that were coming to you at, throwaway valuations. And I think the point here being, let's take a case in point of Eris Life Sciences. It's a stock that we track, that we really like. We're looking at almost a 35-40% earnings compounded. So I think in every sector, the valuations in small caps had reached levels where they were very attractive, and now they were supported with earnings growth. A lot of it maybe because of commodity prices coming in your favor. So I think you're going to land up in a situation where gross margins are going to expand. And if, like I said, between gross and the EBITDA level, if there's nothing that goes awry, the market's paying multiples for that. I think consumption as a theme has changed, right? Pre-COVID, post-COVID. And I think the way people are consuming, even the consumables has changed. And you're seeing this in hotels, aviations, and a lot of other sectors. Unfortunately, when you look at sectors like gaming or allied sectors like, let's say, Delta Corp, there's not too much of a market representation there. So I think IT went through that period of consolidation. And I think even if I look at the downsides at our brokerage house, which Girish has printed, barring, say, an odd persistent or an emphasis here or there, the downsides on the large cap stocks for us are not very material. They'll be about 10 to 15%. So I think if you're a long-term investor, it's not a bad time to start nibbling into some of these names and building a portfolio around them.
All right, that's some market opinion coming in. Moving on to the second headline now. Kotak Mahindra Bank ended with cuts of 0.5%. This after the bank's managing director and CEO, Uday Kotak, announced that he's stepping down. However, Kotak will continue as a non-executive director of the bank. The bank has appointed Deepak Gupta as the interim chief. Abhishek Kothari joins in with details. Abhishek, tell us more about Uday Kotak's legacy going forward.
Well, let's take a look at Mr. Uday Kotak's journey in the financial sector in India, how it began. In 1985, Uday Kotak established Kotak Capital Management Finance Limited, initially focusing on bill discounting. In 1987, the company entered into lease and hire purchase business. In 1990, the auto finance division was launched, catering to financing of passenger cars. In 1991, the investment banking division was established, expanding the bank's services. In 1996, Kotak Mahindra Prime, a joint venture with 4Credit, was launched, enhancing the bank's presence in auto financing sector. In 1998, Kotak AMC launched India's first gilt fund. In 2001, Kotak Mahindra entered into life insurance sector. In 2003, Kotak Mahindra Finance was the first NBFC to be converted into a commercial bank. In 2014, Kotak Mahindra Bank acquired 15% stake in MCX. In 2015, RBI approved merger of ING Vysya Bank with Kotak Mahindra Bank. In 2015, Kotak Mahindra General Insurance received IRDAI's approval to commence the insurance business. In 2017, the bank launched 811, India's unique full-service digital banking ecosystem. It also acquired BSS Microfinance Institutions. In 2021, Kotak Mahindra Bank acquired the vehicle financing portfolio of Volkswagen Finance and made equity investment in KFin Technologies. Under Uday Kotak's leadership, Kotak Mahindra Bank became the 11th largest bank in India in terms of loan book size. It also emerged as the 4th largest private sector bank in India by loan book size. The bank witnessed impressive growth in deposits with a CAGR of nearly 24.5% from FY04 to FY23. Advances grew at a CAGR of about 28.5% during the same period. Kotak Bank achieved the highest net interest margin, that is NIM, and the return on asset, that is ROA, amongst large banks in FY23. Other key achievements are Uday Kotak was appointed as the chairman of IL&FS in 2018 by the government to lead the lenders board and assist the company in overcoming financial difficulties. Uday Kotak is recognized as the richest banker in Asia and the third richest banker globally. He also served as a member of the International Advisory Panel of the Monetary Authority of Singapore. Additionally, Uday Kotak has served as the president of the industry body CII. Uday Kotak's journey in the financial services industry has been characterized by innovation, expansion and remarkable growth, making him a prominent figure in the Indian and global banking sector.
Okay, and speaking exclusively to Shireen Bhan after his resignation, Uday Kotak stressed on the importance to create institutions with trust and transparency. He said, and I quote, "What you create must outlive you." He further emphasized on the importance of protecting the role of founders. He said, and I quote again, "It is very important to preserve the essence of entrepreneurship, even in one of the most regulated sectors."
The bank is required by the Reserve Bank to have three senior positions step down no later than 31st of December, which is the chairman, managing director, and the joint managing director. So we are all in what is called the transition phase as per the regulatory guidelines. And since all three of us were supposed to be going out before 31st December, I felt it appropriate that we sequence the transition. And therefore, I took the decision and went to the board with my resignation, and the board has accepted my resignation. At the same time, has appointed Mr. Deepak Gupta in the interim as the managing director and CEO, subject to RBI approval. Mr. Deepak Gupta's term also ends on 31st December. We have sent in those names well in time to the Reserve Bank of India. And I would also like to clarify that the board has appointed me as a non-executive director on the board today. The requirement is at least 2 names, and the bank has sent 2 names in order of priority.
Okay, all right. With that, let's move on to the third headline today. A CNBC-TV18's news break is confirmed. Zerodha co-founder Nikhil Kamath increased his stake to 3.5% in Nazara Technology by investing 100 crore rupees. Shares of the gaming company rallied in trade on the back of this news. Speaking exclusively to CNBC-TV18, Kamath said that he's looking to increase his stake further in the company. Sonia Shenoy joins us now with more details. Sonia, what are you picking up?
Well, thanks a lot for that. As you rightly pointed out, Nazara Tech is the big stock in focus. The stock is up almost 9%. It's hit a fresh high today, and in fact, the stock has surged above 800 for the first time since April of 2022. Now, as we had reported earlier, the Kamath brothers are interested in increasing their stake in gaming company Nazara Tech because the gaming industry is something that they have their sights set on for the next decade. Nazara Tech will issue 14 lakh equity shares to Nikhil Kamath's companies, which is the MS Kamath Associates, a partnership firm represented by the Kamath brothers. The shares will be issued at 714 rupees per equity share, and the shares will be worth nearly 100 crores. Now, we had a chance to speak to both parties, Nikhil Kamath as well as Nazara Tech, and Nikhil Kamath told CNBC-TV18 that the investment in Nazara Tech is for the long haul. The larger bet is that the gaming industry will be a larger part of the younger generation ecosystem, and that's what they're betting on. The investment in Nazara Tech at this point in time is 150 odd crores, and they've increased their stake from 1%. He has increased his stake from 1% to 3.5% in his personal capacity and not through Zerodha. Now, the bigger story here is the Indian gaming industry and the kind of growth potential that they see in this business. India is now the world's second largest gaming market. In 2022 alone, India saw 400 million gamers, and that compares to 360 million gamers in 2021. Now, as per news reports, the Indian mobile gaming industry is expected to reach $5 billion by 2025, and the overall gaming industry could reach $8 to $10 billion by 2028. If you look at the past as well, right, these are of course projections, but if you look at the past 3 years, between 2017 and 2020, for example, the compounded growth rate that India has seen has far outpaced some of the developed markets like US and China. India has seen almost a 40% growth rate in the gaming industry compared to US at 10% and China at 8% as per news reports. So yes, the focus is on the larger growth that we're seeing in the gaming industry, and hence the stock is up almost 10% today.
Very likely, I'm looking at this as a really long-term play and would love to engage with them more in the future, maybe increase and play the e-sport gaming thing through them. And the stake was about 1%. I think now it should be up to about 3.5%.
I think, from an India tech entrepreneurial perspective, Nikhil Kamath embodies, success and running a very profitable business, pioneering in his space. And from that perspective, I think bringing him on board was something we were very excited about.
Okay, that's about Nazara Technologies and Nikhil Kamat's investment coming in there. But apart from Nazara Tech, Nikhil Kamat owns stake in many other companies in India. Hormas Fatakia takes a look at Kamat's various investments and how they have fared over the years.
Well, Nikhil Kamath, in an interaction with CNBC-TV18 earlier today, mentioned that besides Nazara, he has investments in other listed entities as well. So we tried to dig a bit of data and stumbled upon 4 other names in which he has a stake. But here are some other filters that we have put in place to come up with this data. First up, all of this data is available on the exchanges. Next up, the data that is available on the exchanges is in excess of 1%. Now, all the stakes are in the name of Zerodha Broking, and also that all of these stakes are as of June 30th of 2023. And lastly, a disclaimer that there may be other entities in which Nikhil Kamath may have a stake as well. So let's take a look at these 4 names, and first up is Federal Bank. Now, Zerodha's name in the private lender showed up in the list of shareholders for the first time in the September 2022 quarter. Now, as of date, Nikhil Kamath, Zerodha Broking, owns 1.06% stake that is valued at close to 350 crore rupees. Now, since September of last year, shares of Federal Bank have gone up by 16%. Next up is RBL Bank, which is already in the news because of Mahindra & Mahindra acquiring a stake in it. Now, Zerodha also has a stake since December of last year, and that 1.26% stake is valued at close to 180 crore rupees. Now, since December of 2022, shares of RBL Bank are up close to 30%. BSE is up next, and it just refuses to stay away from the headlines, courtesy its proposed share buyback and the action after that. But Zerodha had first acquired a 1.6% stake in BSE in September of 2020, which had gradually increased to 3.7% as of June 2021. As of date, that 3.7% stake is valued at close to 200 crore rupees. But the more interesting bit is that since September of 2020, shares of BSE have risen by a whopping 500%. Now, lastly, an interesting name that features in this list is Car Trade Technologies. Now, Zerodha's stake first showed up in the shareholders' names in March of this year, and that 1.2% stake is valued at around 30 crore rupees. But the interesting bit is that while Car Trade shares have declined nearly 70% from their IPO price, they are up 16% in the last 6 months, and that is from March of this year.
Okay, all right. Interesting data there. Thank you, Hormas, for joining us with all those details. Time for a break now, but stay tuned. We'll be back in a bit with all the other headlines that we are tracking for you. Welcome back. You're still tuned into Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the 4th headline now. Cement stocks rallied in trade. Shree Cement gained over 6%, while JK Lakshmi Cement, Ramco and others also saw healthy gains. Jefferies continues to expect double-digit growth for the cement space in FY24. Separately, Nomura has upgraded Shree Cement to a buy rating. Nigel D'Souza joins in with details. Nigel, what do the brokerages make of the cement space?
Well, cement stocks were buzzing in trade today, and the street seems to be optimistic about the pre-election demand push as well. Jefferies, they came out with a note and they highlighted a few factors. First, on pricing, they say that prices were lower by around 1 to around 2% odd for the month of August. But come the month of September, there's a price increase that's been pushed through between 10 to around 35 rupees. They've also said that, in fact, on a quarter-to-quarter basis, prices are more or less flattish, which is heartening given that this is a monsoon quarter. They go on to state that in East, price hikes are to the tune of close to around 35 rupees. That's the largest. In West India, the price increases to the tune of close to around 15 rupees, while in Central India, it's around 10 rupees. Absorption of this price increase is something that we'll be tracking from here on. Demand as well remains very, very impressive because of the lower than expected monsoon. And also you had some pre-buying maybe ahead of these price increases. Finally, they go on to state that they're expecting double-digit volume growth for this year for the industry on the whole. And they say Q2 could throw up a surprise because prices are more or less flattish, though it's a monsoon quarter, and input costs have cooled off as well. Shree Cement in particular did very, very well because Nomura came out with a note and they upgraded the stock to buy from reduce. They also upgraded the target price to more than 28,000 rupees. The key reason is they've increased their multiple on an EV upon EBITDA basis from 13 times to around 19 times. They highlight a few facts. One is the cost optimization, the stronger capacity growth, and also the key managerial personnel at the company, an ex-CFO returning, and also Mr. Neeraj Chukuri taking charge. They view all of this positively. Back to you.
All right, thank you so much for joining us, Nigel. To the fifth headline now. IDFC First Bank rallied over 5% after a big block deal. GQG partners bought stake worth 1,500 crore rupees. Abhishek Kothari has the details. Abhishek.
Cloverdale sold shares worth about 2,480 crores, approximately 59% of their holding in the bank. So their holding has now declined to about 2.9% when compared to 7.1% that they had earlier. From this block, GQG has bought shares worth about 1,527 crores and now has approximately close to about 2.6% stake in the bank. Back to you.
Okay, some more stocks in news. Real Vikas Nigam and GMR Power hit 52-week high post big order wins. RVNL bagged a 322 crore rupee order, while GMR Power's subsidiary won a 5,100 crore rupee order. Vivek Iyer is here with all the details. Vivek, big order wins coming through.
Well, the sector in focus today is the railway pack. All of the stocks today are buzz. What we've done is we've actually seen the stock moves of the last 1 year, the last 1 month, where the moves have been quite exaggerated, especially for quite a few of these names. We're looking at the government holding, especially in this case the promoter holding, and especially cases where there would be a requirement in order to bring the shareholding of the government below the minimum public shareholding norm of SEBI, below the 75% mark. And also we're looking at valuations, whether to see, even at this point of time, there is enough value on the table as far as shareholders are concerned. First stock on our radar is RVNL. The last 1 year, the stock is up 387%. That is, the stock is up almost 5 times in the last 1 year. Last 1 month, the stock is up 28%. Government holding here is at 72.5%, and valuations is 20 times FY25 price to earnings. When you're talking about rights, the stock is up 72%. 1 month, the stock is up almost 12.5%. Government holding here is at 72.2%, and valuations is seen at 19 times 1 year forward, FY25 price to earning. IRCTC, this particular stock has been a laggard. The stock is down 1.2% in the year gone by. 1 month, the stock is up 7.5%. Government holding here is at 62.4%, and valuation is at 23 times 1 year forward price to earnings. Ircon, this particular stock has tripled in the year gone by. 1 month up 35%. Government holding here at 73.18%. Valuations at 15 times 1 year forward. FY25 price to earnings. IRFC, this particular stock, important to see the shareholding here. But in the year gone by, the stock is up 303 times. 1 month, the stock is up 45%. Government holding here is in excess of 86%. So there is a risk of an OFS or some amount of dilution that would require to be coming through, given the fact that government would need to bring its holding in the company below the 75% mark. Valuation at 1.4 times price to book. Railtel, the stock last 1 year is up 2.3 times, that is 134% higher. 1 month up 40%. Government holding here at 73%, and valuations is 30 times 1 year forward, FY25 price to earnings.
Okay, all right. Moving on to some more stock-specific news. Subros gained over 4%. The company develops thermal EV solution for hydrogen cell bus as it aims to expand its business in the bus segment in electric mobility. Sonia Shenoy joins us with more details on this one. Sonia.
Well, thanks a lot for that. Subros is up almost about 8%. As we know, the company is a manufacturer of air conditioning systems across OEMs, but the focus now is on the bus segment. The company has developed a thermal electric vehicle solution for hydrogen cell buses and will be looking to expand in the EV and the hydrogen cell bus segment. Currently, they are developing electric air conditioning systems with an integrated battery management system, and this is for hydrogen cell bus applications. They have also reached out to various OEMs in order to sort of sell this product. Now, they supply air conditioning systems currently for all kinds of buses, ICE, EV buses and hydrogen cell buses. So they supply air conditioning systems to the entire gamut of buses in India. If you look at the stock as well, right, the stock has had a phenomenal run in the last 6 months alone. Subros, the stock is up about 52%. It already supplies air conditioning systems to a lot of market leaders in the passenger vehicle space like Maruti, M&M, etc. And now it has its sights set on the bus segment, specifically hydrogen cell and electric vehicle buses. Back to you.
Thank you so much for joining us with those details, Sonia. Well, auto stocks, they were buzzing in trade. M&M, Eicher, Maruti have put out a strong growth commentary. Vijay Nakra of M&M says that their financials are strong in terms of demand as well. Vinod Agrawal of Volvo Eicher CV expects better margins in the CV segment, while Maruti Shashank Srivastav says that the company gained 2.5% market share in the month of August. Listen in.
The financials are strong. The focus is on profitable growth. Capacities are being enhanced. Supply chain is being sort of catered to month on month, and the demand continues to be strong. So from an overall volume perspective, both the small commercial vehicles, which is less than 3.5 ton, and SUVs both have a strong performance currently and going forward.
The heavy-duty trucks, the industry has grown by 20% and we have grown by 50% in heavy-duty trucks. Our EBITDA margins in Q1 were around 8%, and last year it was 6% in the commercial vehicle business. Of course, the margins in the Royal Enfield side are much higher. So we have improved the margins in the first quarter. Let's hope, based on the control in discounting, let's hope these margins should get better on. I think it is fundamentally due to the industry doing very well, and we are continuing to do better than the industry in all the segments. If you look at the overall industry YTD growth now is around 5%, and we have grown on YTD basis by 12%. For the month, industry has grown by 20%, and we have grown by 29%.
In the month of August, the industry sale was 360,900 almost. That's a growth of 9.7% over last year. So that's a very good growth. In fact, this month was the highest ever in the history of Indian auto industry. Maruti also did well. We grew about 16.5%, 156,000 numbers against 134,000. So we grew much faster than the industry. As a result, we gained market share of almost 2.5%. Market share now just short of 43.5%. Festive season is started with in India, starts with the Chingam month in Kerala, 17th August, ends with Bhai Dooj, which this year falls on the 14th of November. And this period generally sees a sale of around 23 to 26% of the overall annual sale. And by the calculation, it appears that we should cross the 1 million sale this festive season. So the beginning has been good. The owner has seen a retail growth in Kerala of almost 25%. So hopefully the trend will continue.
All right, that's all the commentary that we have from the automobile space. And with that, it's a wrap on this edition of Markets Today. Thank you for joining us. Stay tuned for more news and updates.